Good afternoon, ladies and gentlemen. On behalf of Mangalore Chemicals and Fertilizers Limited and SKP Securities, it's my pleasure to welcome you to MCFL's Q4 FY24 and FY24 earnings webinar. We have with us Mr. Nitin Kantak, Whole-time Director, along with Mr. T.M. Muralidharan, CFO, both of whom you have met in the past. This webinar is being recorded for compliance reasons. During the discussion, there may be certain forward-looking statements. These must be viewed in conjunction with the risks that the company faces. I now hand over the webinar to Mr. Kantak for his opening remarks, which will be followed by a Q&A session. Thank you, and over to you, Mr. Kantak.
Thanks, Naveen, and good afternoon, ladies and gentlemen. Thank you for joining us today for our Q4 and FY24 earnings call. I appreciate your continued interest and support in MCFL. I am delighted to announce that MCFL has achieved the best ever operational and financial performance in FY24. I will begin by highlighting the overall industry performance followed by MCFL performance. While the fertilizer industry had a weak quarter, it has performed well on a full year basis. Despite all India deficit rainfall this year, all India urea sales for the year were 35.8 million metric tons, same as previous year. All India DAP sales for the year was up 4% to 10.8 million metric ton. All India NPK sales for the year was up 10% to 11.1 million metric ton. And all India MOP sales for the year was marginally up 0.8% to 1.65 million metric tons. As for the industry, MCFL sales for the quarter were also lower at 1.95 lakh metric tons compared to 2.24 lakh metric ton in Q4 FY23. This was due to the combined effects of deficient monsoons, inadequate summer rains, and critically low reservoir levels, which led to lower crop sowing. However, our total sales for the fiscal year FY24 reached an impressive 8.72 lakh tons, marking our best performance in the last 5 years. And this despite worst combined monsoon in Karnataka, which is our major market, for the last 22 years. We topped total fertilizer sales in Karnataka for the first time with a remarkable 16% market share. And we also dominated and topped the N20 segment with a commanding 27% market share. Operational efficiency remains at the core of our strategy. Our ammonia urea plants continue to operate seamlessly throughout the quarter, underscoring our operational resilience. Additionally, our phosphatic fertilizer plant underwent essential maintenance in March, ensuring sustained reliability of our operations. We ended FY24 with best ever operational performance in the history of MCFL, with record productions of ammonia, urea, phosphatic fertilizers, and record total fertilizer production of 7.55 lakh metric ton. We also posted best ever urea specific energy of 5.6 gigacalorie per metric ton for the whole year. Turning to our financial performance, the fourth quarter posed challenges marked by notable decrease in NBS subsidy, alongside high input costs and also difficult market condition. These hurdles impacted our sales and margins on phosphatic fertilizers. Additionally, margins on urea beyond the reassessed capacity of 379,300 metric ton were negligible, further denting our profitability for the quarter. As a result, our profit before tax for Q4 dropped to 7.2 crores from 51 crores in the previous quarter and 92 crores in Q4 FY23. However, overall for FY24, we have achieved all-time high PBT of rupees 241 crores compared to 176 crores last year. Furthermore, I am thrilled to reiterate our exciting merger announcement with Paradeep Phosphates Limited, which was announced in February 2024. This strategic union will propel us to become one of the largest private sector fertilizer manufacturers in India, with a combined installed capacity of 3.66 million metric tons. The merger not only enhances our geographic footprint, but also unlocks synergies that will drive value creation for all stakeholders. Looking ahead, we anticipate a promising outlook for the upcoming fiscal year FY25. The Indian Meteorological Department's forecast of an above-average monsoon, what is estimated is 106% of long-period average, provides a favorable backdrop for improved performance compared to FY24. We are poised to leverage this opportunity to further strengthen our market position and drive growth. In conclusion, I extend my gratitude to our investors, employees, and partners for their unwavering support. Despite the challenges, we remain steadfast in our commitment to delivering value and driving sustainable growth. I look forward to our continued collaboration and success in the journey ahead. Now I'll turn the floor to our CFO, Mr. Muralidharan, for a detailed presentation of our financial performance. Thank you.
Murali, I'll just share the screen and then you can take it from there.
Yeah, thank you.
Murali, is it visible?
Yeah, visible. Go to the earlier slide, please.
Sorry?
Go to the earlier slide. One slide.
Yeah. Just give me a minute, please.
Just move on. Yeah. Stop. Okay. Good afternoon. Thank you, sir, for giving the lucid presentation on the performance for the quarter ending March 2024 and also for the financial year ending 2024. In this presentation, we shall cover the highlights of the performance for Q4 FY24 and the annual past performance. To give an overview of the performance of FY24 Q4, the production of urea beyond RAC was at 58,197 metric tons, and the highlight on phosphatics is the production was moderated based on the market conditions and the demand. Next please. Naveen. Now we see the highlights of the performance for the quarter ending March 2024 and for the full financial year FY24. Start with the performance for the quarter. We have registered a growth of 42% in sales volume during FY24 at 8.72 lakh metric tons compared to 6.14 lakh metric tons in FY23. This is due to higher urea and phosphatic production and also higher imports during the year. Coming to sales during FY24 Q4 is 1.95 lakh metric tons compared to 2.24 lakh metric tons in Q4 FY23, reduction of 13%. Compared to due to no imports during the last quarter of current year compared to previous year. Coming to revenue from operations for FY24, we have registered a growth of 4% at rupees 3,795 crores in FY24 compared to rupees 3,642 crores in FY23. Revenue for Q4 FY24 is at rupees 786 crores compared to 1,164 crores in Q4 FY23, a decrease of 32% on account of reduction in volumes of import during the current year compared to last year. Coming to EBITDA, EBITDA for the year FY24 is at rupees 417 crores compared to rupees 340 crores in FY23, which is a growth of 23% due to increased sales volume and improved efficiency, as highlighted by our Mr. Nitin Kantak. EBITDA for the quarter Q4 is rupees 49 crores compared to rupees 139 crores in Q4 last year, which is a decrease of 60% due to lower EBITDA for production beyond RAC in the last quarter of current year compared to higher EBITDA for RAC quantity in previous year. Coming to PBT for FY24 increased by 37% at rupees 241 crores from rupees 176 crores in FY23, primarily on account of higher sales volume and improved efficiency. Whereas PBT in Q4 FY24 is at rupees 7 crores compared to 92 crores in Q4, a reduction of 92% on account of policy on urea and NBS. PAT for FY24 increased by 15% at rupees 155 crores against 135 crores in FY23. PAT in Q4 FY24 is at rupees 5 crores compared to 68 crores in Q4 FY23, a reduction of 33%. Coming to the EPS for FY24 is at rupees 13.06 rupees per share compared to EPS of rupees 11.36 rupees per share in FY23, an increase of 15%. EPS for Q4 FY24 is at rupees 0.41 rupees per share compared to EPS of 5.73 in Q4 FY23, a decrease of 23%. Now we move on to details of production and sales and revenue. The production and sales of urea is 1.22 lakh metric tons and 1.23 lakh metric tons respectively in Q4 FY24 compared to production and sale of urea of 1.25 lakh metric tons and 1.24 tons in Q4 FY23. As far as FY24 is concerned, we achieved a production and sale of urea of 4.35 lakh metric tons apiece compared to 3.32 lakh metric tons and 3.31 lakh metric tons in the corresponding period FY23. Let us move to complex fertilizers, where you could see the significant achievements we made. With regard to complex fertilizers, we have sold 0.72 lakh metric tons in current quarter compared to 1 lakh metric tons in Q4 last year. For a full year FY24, we have sold complex fertilizers of 4.37 lakh metric tons compared to 2.83 lakh metric tons of corresponding period of previous year. Revenue and operations, as far as urea business has posted a revenue of 493 crores in Q4 FY24 compared to rupees 588 crores in Q4 FY23, and has posted a growth in revenue from rupees 1797 crores in FY23 to 1815 crores in FY24. Non-urea business also registered a revenue of 293 crores in Q4 FY24 as against 576 crores in Q4 of FY23, and rupees 1980 crores in FY24 as against 1845 crores in FY23. Next slide. Now we should look at some details of financial position. Net worth appreciated by rupees 137 crores between March 2023 and March 2024. The net worth stands at rupees 940 crores at the end of March 24. As far as the long-term debt is concerned, there is a net decrease of rupees 58 crores in March 24 over March 23 after factoring repayments. Coming to short-term debt, that is working capital, is rupees 121 crores in March 24 as against 1001 crore in March 23. The reduction is due to improved liquidity both from the market as well as from the Government of India by timely disbursements of the subsidy dues. The short-term surplus is rupees 328 crores in March 24 as against rupees 366 crores in March 23. We shall now review the position of receivables. As you are aware, there are two types of receivables in the bulk fertilizer industry. One is the dues from the dealers, other one is from the dues from the Government of India by way of subsidies. Market debtors is rupees 153 crores in March 24 as against 124 crores in March 23. As regards subsidy receivables, it is rupees 451 crores at the end of FY24 as against rupees 634 crores at the end of FY23 due to timely disbursement of subsidies by the Government of India. Now we will look at some past annual performance. The revenue from operations was rupees 2,711 crores FY20, increased to rupees 3,795 crores in FY24 at a CAGR of 9%. As regards EBITDA, you can see from the levels of rupees 200 crores for FY20, we were able to maintain the EBITDA and even during difficult times during FY20 to 22, and we're able to, from there on, we're able to improve it to 340 crores in FY23 and further improve to 417 crores in FY24, registering as CAGR of 16%. While the PBT has improved from 70 crores to 241 crores in FY24 due to receipt of natural gas in FY21 and successful commissioning of the ammonia energy improvement project in FY23, by registering a CAGR of 36%. In respect of PAT, similarly, we can able to improve from the levels of 65 crores in FY20 to rupees 155 crores in FY24 at a CAGR of 24%. Cash profit has improved from 110 crores in FY20 to rupees 226 crores in FY24 at a CAGR of 20%. Similarly, you could see the earnings per share has improved from rupees 5 per share in FY20 to rupees 13 per share in FY24, registering a growth, a CAGR of 24%. We could see from the total receivables has come down from the peak levels of rupees 1,446 crores in FY20 to rupees 604 crores, which is more than reduction of 50%, which translated into better finance cost during the year and the past also. This is possible on account of improved liquidity in the market and significant reduction in subsidy receivables due to the fiscal stimulus given in FY21 during COVID-19 to clear subsidy arrears and continued additional support given in the 3 years FY22, FY23 and FY24 by the Government of India and timely disbursement of the same. We expect this trend to continue as we go forward, as Government of India is committed to ensure that the health of the fertilizer industry is kept at a good shape by timely disbursement of subsidies. Next. We shall look at the details of production and sale of urea. We are able to consistently produce 3.8 lakh tons per annum, which is our resource capacity. However, last financial year FY24, there's reduction in FY20 production due to plant shutdown for implementation of urea project, energy improvement project. The trend in sale of peak fertilizers is based on availability and viability in this vertical. Next slide. We carry this slide for first-time participants. Kindly bear with me. This is an overview of MCL operations. As regards the location of the plant, products manufactured, the capacities, marketing territories, and the brand. The plant is situated at Mangalore West Coast, opposite Mangalore Port, and our present capacity of urea is 3.8 lakh metric tons, which is our resource capacity, whereas the capacity of DAP and other complex fertilizers is 2.8 lakh metric tons per annum. We are also trading in MOP, DAP, 1026-26 based on market opportunities and business viability. We operate in the states of Karnataka, Kerala, Tamil Nadu, Andhra Pradesh, Telangana, and Maharashtra. We sell about 78% of our sales in Karnataka, 2% in Kerala, 10% in Tamil Nadu, 6% in Andhra, 4% in Maharashtra. We sell under the brand name Mangala. Thank you for your time.
Thank you, Murli. Friends, we now open the floor for the Q&A session. Anyone wishing to ask a question, request you to raise your hand. We'll unmute you and take your question. While others line up, we'll take the first question from Darshita Shah. Darshita, please go ahead.
Yeah, hi, good morning. Hello, Baltak sir and Murli sir. Thank you for the presentation. My first question was regarding the traded and manufactured volume split of the 1,95,000 lakh of volume that we have done. How much would be traded?
So not done any trading.
No trading.
Okay, so the entire is manufactured.
Yes.
Got it. Okay. Second question was regarding the urea EBITDA per ton. Despite the fall in the profitability for the urea sales beyond reassessed capacity, would the EBITDA per ton have maintained at 5,000 rupees during the fourth quarter as well?
Okay, I'll take the question, sir. Rachita, as I explained to you, we are governed by different policy, okay, for production beyond RSC. As per the policy they notified for this financial year, we are subject to year-on-year approval process. As per the policy, they are given an approval for producing beyond RSC. And but the EBITDA what we realized is about 3,000 rupees per ton compared to the levels what you indicated.
Okay, so instead of 5,000, we had about 3,000 rupees. We did 3,000 rupees EBITDA per ton.
Yeah, exactly.
Okay.
Only for this quarter only. Okay.
Only for this quarter, but for the next year, we for annual, like on annual basis, we maintain our EBITDA per ton at 5,000 rupees for urea.
Yeah, we will maintain.
Got it. Okay.
Yeah. Again, subject to Darshita, it is subject to the gas prices and the current gas prices and the what you call turmoil in the oil and gas industry due to the tensions in the West Asia. If the levels are maintaining up, okay, so this will able to we can able to realize this 5,000 rupees per ton of EBITDA for urea.
Hello.
Yeah.
Murli sir, I think there was some network issue. Could you just repeat the gas cost for the quarter?
Yeah. See, what I said is, thank you. Assuming that the current prices of the gas prices holding up, okay, at the current levels, despite the turmoil in the West Asia due to the tensions, we expect the prices are continuing stable at this price. We can expect a EBITDA of 5,000 rupees per ton for urea.
Okay, and what is the current gas cost?
About $16 to $17.
$15.
Sorry?
$15 now. Okay.
Okay. And for the quarter, it was how much?
Same. This last 6 months is holding around the levels of $15 to $16 only here and there. Okay. It's not either hardening nor it's softening also. It's same level is holding onto it. Okay.
Okay. So if we consider 3,000 rupees EBITDA per ton, we did 10 crore odd loss in the non-urea business. So this was largely because of the lower subsidy, is it?
The government of India has issued new policy on NBS for the complex fertilizers, which you are aware. Okay, so they have reduced the margins from 12% to 8% and 10%. They have brought in some few categories and few more other constraints they have posted. That is the reason for that. And as I told, has been but call in the earlier investor calls, we have been telling you, it is we have been tracking it not on quarter-on-quarter basis. We focus on more as an year as a whole because there are regulatory requirements to be followed on NBS as well. So this could be an aberration for this this quarter, and going forward we will be able to see as market opens up and opportunities, and the subsidy rates are announced, and the timing difference of realization of the dues the subsidy dues from the government, all will have factor into this. Okay, so this is maybe aberration. I would I'll conclude.
And for annually, I mean, just on annual basis, looking at the volume data, on an approximate basis, we would have done about 5,000 rupees EBITDA per ton in the non-urea business
around
for FY2024.
We've done about 4,500, not 5,000, 4,500.
Okay, 4,500.
Yes.
And for urea, that would be how much?
Around 5,000.
Around 5,000.
Yes.
Got it. Okay, perfect. And just one last question on the debt reduction. How are we, I mean, for FY25, do we have any debt reduction guidance?
Yeah. For FY24, as you saw, you know that the classification of debt is into between short term and long term. Effectively, we have repaid close to about 90 crores during current FY24, and the as per the schedule for FY25 there will be further reduction of 60 crores, and FY26 another 78 crores will come down, and this is the next 3-4 years we'll be able to wipe off the entire what you call the outstanding based on what current borrowings.
Okay. Got it. Thank you, Murli sir. Thank you, Kantak sir. That's all from my side. I'll get back in the queue.
Yeah.
Thank you, Darshita. We take the next question from Nirav Jibudia. Nirav, please unmute yourself and go ahead.
Yes, sir. Thanks for the opportunity. I have a few questions to ask.
Sure.
So, sir, one, when we started those energy saving exercises, and from when our plant got converted from naphtha to natural gas, I think the starting period was December 20, and the benefits could be extended towards December 25. So, as per the new urea policy of 2015, we were getting compensated at around 7.356 Gcal per ton, and what we actually achieved was around 5.6. I think last year it was around 5.88. So in one of the calls, you also mentioned that we were intended to move lower towards 5.5 and even lower than that. So an update on the same. And is it right to presume that once those deadlines of December 25 goes away, our Gcal norms would be reset to around the current levels of energy consumption?
Yeah, I will take it up, Murli.
Okay, sir.
See, the last year, although after energy improvement project, we were expected to get 5.5. The first 6 months, we have operated our ammonia plant at lower load because of our primary reformer tubes. They were due for replacement. They were almost 24-year-old tubes. And that's the reason we restricted ammonia load. And we were operating at a higher energy in the first 6 months. In September, we took a annual shutdown for replacement of the primary reformer tubes. And then on, we have been operating at lower than 5.5 Gcal per ton. So that's the reason we have ended up the year at 5.6. Going forward, also, our endeavor will be to achieve 5.5, which we are normally achieving. But there is also a catch here. Currently, if you see our own ammonia price is much higher as compared to the purchase ammonia price. See, normally in our ammonia plant, you generate some surplus ammonia, which is actually used for our NPK plants. Now, if you compare the purchase ammonia price versus our own ammonia price, since there is a large difference, we are forced to cut down on our surplus ammonia. And that's the reason we have to operate at slightly higher urea energy. That is the current situation, but it can change over the next year.
This is one temporary, sir. Sir, thank you for your... And Nirav, it is only temporary situations. I think we can align. So this is a bit difficult for us to give a guidance on this because it is very volatile because ammonia prices are dependent on gas prices, which is dependent on crude prices. A whole lot of factors. Called proactive in what you call having a business model, review model, where we're able to cash in the best of what you call opportunities to maximize our returns.
Correct. And sir, is it right to presume that these benefits would continue to us till December 25? Till the time we recoup our investments, what we have invested for conversion to gas?
Yeah. Yes. December 25 is a return policy, issued in writing. See, then till 2025, December 25, we'll realize this particular higher what you call fiscal incentive, which will be able to what you call sufficient for us to recoup the cost of investment, definitely.
So, if we go by the investments what we have made, on an annual basis, we would be recouping close to 75 to 80 crores every year, and possibly this number is also getting captured in our EBITDA.
Yeah, obviously.
Correct. Sir, second is on the one of the earlier participant was asking about the gas cost, and you mentioned that the profitability also depends upon the gas prices. So, I was doing some math. So, let's say if just for the sake of calculation, let's say if the gas prices are $17, and when we convert it into GKL rates, and let's say if the gas prices falls by $1, the impact could be 500 rupees per ton to the EBITDA. Is it correct to assume?
We'll
May not be fine.
Nirav, we'll take this discussion because more detailed calculations are driving this. Okay, so we'll take it offline.
Much lower than the 500 rupees.
Okay, fine. And sir, last question from my side is possibly the fixed cost revisions have not happened. And for the urea players, right from 2003, there was one ad hoc increase given to the players to an extent of 150 to 200 rupees. So the rates at which the government compensates us in terms of fixed cost per metric ton and the fixed cost what actually we incur on, can you give some sort of quality understanding? Let's say, are our fixed costs lower than what government is currently compensating to us, or is it slightly on the higher side?
You can take it.
Okay. Nirav, the amount of fixed cost was fixed in 2000, cost year 2002, 2003. Okay. So the cost what we're incurring is more than what they're being reimbursed. Okay. And there is, as observed by you, the Department of Fertilizers is formed a committee to evaluate with the discussions to what we call the actual cost spent by all the companies. There is a committee formed to study this. A lot of data has been asked by them, and if the industry has submitted many data to that also, and is under the active consideration of the DOF, and also obviously with the Department of Expenditure also, because ultimately they are getting the subsidy, what additional subsidies disbursement has to be factored in budget. Okay, so the process is on, and we expect that after this new government is coming in place, there will be a further review, and there could be a suitable policy rehash can happen. Okay, at this point of time, difficult to give any directions because just the data is submitted, and whatever of an analogy or conclusions drawn is we are at stage of a premature stage.
Correct. So just to conclude, sir, is it fair to presume that our fixed cost is lower than what is actually getting compensated, or it is slightly on the higher side?
Opposite, I told you, no, what we are getting compensated is much lesser than what we are incurring. Okay.
Got it, sir. Thank you so much, and wish you all the best.
Thank you.
Thank you.
Thank you, Nirav. Friends, anyone with a question, please raise your hand. We'll unmute you and take your question. Darshita, you have a follow-up question?
Yeah. So after the policy gets updated post December 25, what kind of cut in EBITDA per ton are we expecting for the urea piece? Hello, am I audible?
Yeah, I'm just.
Yes, Darshita. Murali is making some calculation.
Okay.
We'll get around 4,000 rupees per ton.
Okay, so FY26 onwards, post FY26, we'll get about 4,000 rupees from the current 5,000 rupees.
Yeah. Again,
but government is also working on a new policy. Okay. There is already discussions going on. There's a separate committee formed where Niti Aayog is also involved. And a lot of discussions are happening along with the fertilizer industry, the urea manufacturers, and the Fertilizer Association of India. And they are going to come out with a new policy. That is still not clear what exactly would be the policy.
Right. And this 4,000 rupees is subject to change if the gas cost increases from here on.
Yes. we are assuming that the current prices of the gas will not either appreciate or depreciate. Okay. On the current levels, we are giving that outlook.
All right. Okay. And for FY24, as you highlighted that the GCal was about 5.6. For FY25-26, apart from the sulfuric acid bit, do we have any other plans to further improve it?
As of now, we don't have any plans, but going forward, once the merger process of PPL and MCFL may take place, there is a good opportunity for us because, we will be, OCP will be our group partner and there is a opportunity for backward integration possible going then. Of course, those decisions will be taken once the merger process is completed.
Right. And that backward integration?
Yeah, we have got sufficient land area also in Mangalore, and already we had worked on some plans for NPK plant at Mangalore, and we'll be working on all those things once the merger process is completed.
Got it. Okay. And the sulfuric acid plant, I think last time we had mentioned that it should be commercialized by May 25. So are we on track with that?
By July 25. It will be completed by July 25.
By July 25.
Yes. And currently, the basic engineering of the plant is completed. Detail engineering is in progress. And we have already placed order for long lead items. And further, right now, site leveling is already completed. And piling work is in progress. And civil work is due to start, maybe in another 2 months' time.
Got it. Okay, perfect. That's all from my side. Thank you so much.
Thanks, Darshita. Nirav, do you also have a follow-up question?
No, sir, I'm done with.
Hand was raised. Friends, anyone with a question, please raise your hand and we'll take it up. As there are no further questions, I'd like to hand over the webinar back to Mr. Kantak for his closing remarks. Sir.
Thanks, Naveen, again. Thank you for your active participation and insightful discussion during today's earnings call. As we conclude this session, I am encouraged by our collective resolve to overcome challenges and seize opportunities. Past quarter has been a testament to our resilience and adaptability in navigating through dynamic market conditions. Despite facing headwinds, we have emerged stronger, reaffirming our position as a leader in the fertilizer industry. Looking forward, we are excited about the prospects that lie ahead. The merger with Paradip Phosphates Limited represents a significant milestone in our journey towards creating long-term value for our stakeholders. Together, we are well positioned to capitalize on emerging opportunities, drive operational excellence, and deliver sustainable growth. I urge you to stay engaged with us as we embark on this transformative journey. Your continued support and insights are invaluable as we chart a path forward towards a brighter future. Thank you once again for your participation. Have a great day ahead.
Thank you, Mr. Kantak. Friends, my email ID and number are mentioned on the invite. So in case there are any follow-up or unanswered questions, please feel free to write to me. We'll take them up with the management. On behalf of all of us at SKP Securities, thank you very much, Mr. Kantak and Mr. Muralidharan, for taking time out for this webinar. And we look forward to hosting you in future as well. Thank you and have a lovely day.
Thank you.
Thank you.
Thank you and all. Thank you all.